Hope everyone's doing great. This is Jay from J and D's Retirement Journey. Today we're going to take a quick look at Realty Income symbol O and compare it to some of its peers. The Simon Property Group, symbol SPG, Kimco Realty Corp, symbol KIM, Regency Centers Corp, symbol REG, and Federal Realty Investment REIT, symbol FRT. If you're getting value from this video, please remember to subscribe and hit that thumbs up button. It'll really help out this channel. I really would appreciate it. Let's go into the company profiles for all these companies here. We'll start off with Realty Income, the monthly dividend company. It's an S&P 500 company and member of the S&P 500 Dividend Aristocrats Index. The company is structured as a REIT, and its monthly dividends are supported by the cash flow from over 13,250 real estate properties, primarily owned under long-term net lease agreements with commercial clients. The company has declared 640 consecutive monthly dividends on its shares of common stock throughout the 54-year operating history and increased the dividend 122 times since Realty Income's public listing in 1994. You know, I love my dividends, guys. We'll go over to Simon is a real estate investment trust engaged in the ownership of premier shopping, dining, entertainment, and mixed-use destinations, and an S&P 100 company. Our properties across North America, Europe, and Asia provide community gathering places for millions of people every day and generate billions in annual sales. Guys, this is right off the Charles Schwab website. You guys could go right into every company website and actually get more detailed information if you're interested in investing. Before you guys invest, talk with your financial planner. I am not a financial planner. Do your research. And the next summary is Kimco Realty. It's headquartered in Jericho. It's the North America's largest publicly traded owner and operator of open-air, grocery-anchored shopping centers and a growing portfolio of mixed-use assets. The company's portfolio is primarily concentrated in first-ring suburbs of the top major metropolitan markets, including those in high barrier-to-entry coastal markets and rapidly expanding Sunbelt states. I'll let you guys read the rest here. And I'm going to shoot over to Regency Centers. It's an operator and developer of shopping centers located in suburban trade areas with compelling demographics. Our portfolio includes driving properties, merchandise with highly productive grocers, restaurants, service providers, and best-in-class retailers that connect to their neighborhoods, communities, and customers. All right. Let's shoot over to Federal Realty. Is recognized as a leader in the operation and redevelopment of high-quality retail-based properties located primarily in major coastal markets from D.C. to Boston, as well as San Francisco and Los Angeles. It was founded in 1962. It has 102 properties and 3,300 tenants. Take a quick look at the company summaries. We'll start off with Realty Income. Last price, $59.27. All these prices are close of business 1/11/2024. Schwab rates it a D. The 52-week range was 45 to 68. Average volume is about 6 million shares a day, I guess. And the yield is 5.21. As we shoot over to Simon Property Group, last price was $144. It traded a B. The 52-week range was 140 to 146. All these companies ran around a lot because of the interest rates this year. So you're going to see a lot of ranges here. The average volume is like 1.2 million, and it pays a 5.25 yield. Kim Realty Corp, $20.53. The range was 16 to 23 for the year. It averages about 8.5 million shares traded a day, and the yield is 4.58. Regency Centers Corp. Last price was 64 and change. 52-week range was 55 to about 69. 1.1 million shares traded. It's about the average. 1.2 is about the average. A little bit over 4% yield. Federal Realty Investment Trust closed at almost 102. The range was 85 to 115. And it does about 700,000 shares a day, and the yield is 4.22. It's a quick overview of all the companies. Schwab has Realty Income rated a D. Simon Properties, it's a B. Kimco Realty, it's a C. Regency Centers, a B. And Federal Realty, a C. The market cap starting with Realty Income is $43 billion. Simon, $47. Kimco, $14. Regency, $12. And Federal, $8. So it looks like the big guys here are Realty Income and Simon, market cap wise. The PE, 45, which is a little high for Realty Income. Then you got 22, 29, 30, and 29 for Federal Realty. The dividend yield, they're about 521, 5.25, 458, 416, and 422. The net profit margin here, Realty Income, it's about 23%, 46% for Simon, 22 for Kimco, 29 for Regency, and Federal Realty is at 27%. The fundamentals, I'm not going to go over everything because some of these numbers are repeated here. We spoke about it already, but long-term debt, they're all going to have a lot of debt because they're real estate investment trusts, so they rely heavily on the debt markets to buy more property. So as you go across, 64% for O, well, that number's out of control here. Simon says 843%. It's a huge number. 74, 57, and 156 for Federal. Return on equity, 3%. You could go across for Realty Income, 75%. As you go across the board. On the bottom here, PEs, 45 for O, 22. As you go across the board, you could read. The forecasted PEs, about 46, and about the same. Some of them came down some, but they were about the same. You guys could take a quick look at everything else. Let's see what the analysts are saying here. Morningstar has O rated a 5-star. Argus does not have a rating. S&P Global has a hold on it. Refinitiv has an outperform. I believe the price target was something like 61 and change. We go to Simon. Morningstar has a 3-star. And a buy rating from Argus. S&P Global has a hold on it. And Refinitiv has an outperform. Kimco, a 4-star from Morningstar. A buy from Argus. A hold from S&P Global. And an outperform from Refinitiv. Regency has a 4-star rating from Morningstar, a buy from Argus, a hold from S&P Global, and an outperform from Refinitiv. Federal has a 4-star rating from Morningstar, no rating from Argus, a 5-star rating from S&P Global, which is a strong buy, and an outperform from Refinitiv. As you can see, the annual growth rates for these companies are right here. I guess you could go right down the chart and look for yourselves, guys. When we look at the dividends, I like to look at the coverage ratio. This way you can see if the companies have room to increase the dividends. And it looks like O has plenty of room. They only at 43%. Everybody else is a lot higher, which is pretty cool. Dividends paid for the year, 3.31, $7.45 for Simon, 102 for Kimco, 262 for Regency, and 433 for Federal. As you could look at the 10-year growth rate, They're all pretty decent, except it looks like Kimco. I don't know if it's a negative. They might have had a dividend cut. But 10-year growth, 5.29 for O, 534 for Simon, negative 105, which is not good for Kimco, 316 for Regency, and 438 for Federal. Looks like all these companies are pretty much profitable. You could just take a quick look and compare all the companies on this chart here. You guys could take a quick look on this last slide on financial strength. Most of these numbers are repetitive. We did go over them earlier in the video. I personally own 500 shares of O. I love it because of the monthly dividend. It pays me around $130. I keep reinvesting, so it's going to keep growing over the years. I don't plan to sell it. I'm a long-term investor. I believe any of these REITs are good investments. Talk with your financial planner, do your research. Like I said, I love dividends, so these all pay decent dividends. Good luck to everyone, and thanks for watching the video.